Oh, hello everyone, it's Susie again from Esoteric Trading Solutions. I just want to answer some of your questions for the last video. I do appreciate most of the comments, and it was great. Just want to say, please be kind to yourself, be kind to other people, be kind to your family and friends and your animals. I will say to some people though that are rude and honestly lack respect, seriously. If it's not constructive criticism, I'm just going to ban you. I'm going to block you from my YouTube, because I do this for nothing. I really know my stuff. Again, I know a shitload and I've got the experience. And if you want to give me smart ass remarks, basically go and listen to some other idiot YouTuber that doesn't have a clue. So, because I'm very happy to block you. And, you know, again, I do this for nothing, but I'd like to get paid for it, and I will. Going forward when I become extremely well known. But, you know, they know who they are and they're just going to get blocked. It's just that simple. Okay, so let's get on with this. Right, won't be a minute. Okay, the first question I got, well, I've got a lot of questions, but I'll just address as many as I can. There's a big debate going right now regarding whether, well, not cryptos are securities. If Ripple is not, then how do you add value to Ripple? How do you add value to XRP of Ripple success? Also, please take care to distinguish between the two. Yep, I agree with that. And yeah, fair enough. So I'll be very, very distinctive. Right. I believe Ripple, number one, is a cryptocurrency because the technology is decentralized. As Brad Garlinghouse says, it is decentralized. They have and I'm not just taking what he says as being gospel. They have over 1,000 nodes, more than most other cryptocurrencies out there. You know, whether it be Neo, whether it be EOS, whether it be, you know, any other cryptocurrency. Admittedly, Bitcoin's got more, but they do have well over 1,000 nodes, and because of their technology, they don't need as many nodes, but they are still decentralized. The company, yes, you know, XRP was issued by Ripple, and the company, yes, is centralized, but the technology is decentralized. Let's get that straight. Cryptocurrencies, including XRP, in my mind, are securities. Financial markets, in terms of financial markets, every trader or financial markets person will see cryptocurrencies or XRP being a security. Now, what is a security? It's not just equities and it's not just debt. And it doesn't have to be about ownership. A security in its real form, in its truest form, and forget about the Howey law or whatever it is, it's irrelevant. In terms of financial markets, in terms of financial market people, they basically see security as being this: can be exchanged for value and involves risk. The Howey thing or whatever, the lawyers get involved and it becomes a legal, definition of security. But in terms of market practitioners, in terms of the professional wholesale market, where people know what they're doing, not the retail market, a security is seen as something that is exchanged between two parties, exchanged for value, and involves risk. So basically it's transferable between two parties. It doesn't even have to be subject to ownership, okay, where you run the risk of losing your principal or part of your principal. Now, I'll give you an example of this. There are many securities in the financial markets, i.e. futures, which there is no ownership of the underlying product, but they are still considered securities. Okay, so if you have Bitcoin futures, if you have corn futures, if you have, wheat futures, bond futures, whatever, bond futures that are issued by the exchange, they're still deemed in the financial market sense as distinct from a legal sense as a security, where there are two parties, one transfers to the other, there's a profit and a loss, it's exchanged for value, and it involves risk. That's pretty much how financial markets see a security. Okay, in the professional wholesale market, not the retail market. Okay, what I mean by the professional wholesale market, the people that deal with millions and billions of dollars, okay, that have incredible, backgrounds in terms of, they could be quants, they could be mathematicians, they know how to price up, cash flows on discounted security, formulas like I do. They know how to, run trading systems and algo models that actually make money and arbitrage between the markets, something a retail person doesn't have access to. They have access to all sorts of things, the best technology in financial markets to make the money. And they trade the markets. They have economists, they have credit people, they have people looking at the products, checking it, they have their own credit equity analysis, they have all sorts of people. Credit analysis for bonds, they have, people that, value and look at private equity, which is before something even gets issued as an IPO that goes on the stock exchange. So what happens is professional investors invest in private equity, which is seed capital, that doesn't even get listed on the stock exchange. They actually take on the risk before something becomes listed on the stock exchange. Now, what I'm saying about cryptocurrencies is they are a form of funding. And what I mean by that is a company can come out like Ripple, excuse me, and issue debt, which is a debt security. That's a form of funding. When they issue debt, the investors will buy that debt and give Ripple money. If Ripple does an IPO, initial private offer on the stock market, it's a primary issue where they need prospectuses, just like debt. They issue, they do a prospectus for equities, and they get money in the tin from investors. Crypto is the same thing. When Ripple got their seed capital where they started way back, whether it be 2004 or 2005, they got their seed capital from somewhere to generate the technology that they did. And even if they didn't do an ICO with Ripple, with XRP, I know I've got to remember that, and I will. Even if they didn't do an ICO with XRP, there was a company, one of the banks, the Spanish bank, Salamando, what it was called, gave Ripple seed capital, and that's what you call it, seeded capital, before they even started trading XRP, before XRP was even put on the exchanges. It's called seed capital. Now, in terms of the regulation, anything where there's seed capital or where you get money from an end investor needs a prospectus. It was seeded capital. They were the first or, fifth investor to invest in Ripple's technology. Now, Ripple got its money from somewhere to create this technology. People do not do anything for nothing. Yes, in some of the cryptocurrencies, I know you're going to say, some do voluntary. That's fine. But let's sort of practically, how long is someone going to do voluntary work on the technology of a cryptocurrency? It's going to be fairly short term, isn't it? And also the maintenance of the IT system, and make sure there's no hacks, and make sure that everything's working properly. It isn't a viable product. If people don't get paid for the longer term, they're not going to keep giving up their time, are they? It's very, very simple. So, that's pretty much the story. Now, as I said, I believe crypto is a security, given what I've just set up here, and it is a funding tool no different to any other security. Okay? Now, Ripple, again, had, seeded capital way, way, way back, whether it be 2004, 2006, where they had the initial investor that, or investors that took on that risk. okay? And the initial investor that took on that risk for, you know, a technology company that wasn't even known was taking on all the risk. They were handing out their money for something they didn't even know whether it was real or whether it wasn't. So Ripple got seeded capital from investors. And I think one of them was Salamander, or whatever you call them, the SBI they're called, the Spanish bank. Okay, just going back to futures, again, there are no ownership in terms of futures, but they're deemed securities in terms of financial markets, not in the legal sense, where people buy and sell futures for a value and there's risk involved and you either lose money or you make money. But you don't actually own the underlying, okay? Some futures have delivery of the underlying product. Some futures don't. You have to cash settle. Now, in the Australian market, I'll give you an example of that. We have bill futures, you know, bank bill futures like NCDs, right? If you hold that future to the maturity date, you have to basically settle with a physical bill, right? Bank bill, a physical bank bill. If you hold a bond future, you know, a 3-year bond future or a 10-year bond future, you basically cash settle on expiry. So you don't own or sell the underlying bond. You don't have to buy the underlying bond or sell the underlying bond. With a bill future, if you don't close it out on expiry and you bought bill futures, you've got to buy the underlying physical, right? The underlying the underlying bank bill, you know, which is going to be 5 million less the discount rate, okay, 4.955, where you've got to physically come up with cash. Okay, if you sell the bill future and you don't close it out on expiry, you have to sell bills, physical bills. So there's physical delivery. With bond futures, there's a cash settlement delivery. Okay, so two different things. But in terms of the financial markets, they're still seen as being securities. And in my mind, cryptocurrencies should be subject to the same regulation as other markets. They are no different. The difference is, you know, in a financial market sense, the securities trade up and down, transfer between one party against the other. There's a buyer and a seller, and there's a profit and loss involved in that. And that's pretty much the story. Against that crypto, it's supposed to be a reflection, the price of that crypto is supposed to be a reflection of the technology of the business and the usability of that crypto, okay? So pretty much no different to if Ripple issued shares or bonds. If Ripple went broke tomorrow, now look at it this way, if Ripple the company went broke tomorrow, the share price would go to zero, and their bond price would pretty much be down to 10 rather than 100, okay? So pretty much they would be priced like the company's about to go bankrupt, okay? If Ripple the company, and I hope this is very clear, if Ripple the company went broke tomorrow, where do you think the technology would go? Think about it. Ripple the company maintain the technology of what they do with X current, X rapid, and X via. If they went broke tomorrow, right, the technology would not be maintained. It wouldn't be best of breed. It wouldn't develop and mature as time goes on and keep updating and keep getting better and better, right? Even when computer systems are getting faster and faster, you know, ASIC systems are being replaced by other quantum systems or whatever, the technology of Ripple would be left behind compared to other cryptocurrencies. Now, as I said before, it's not enough that you have volunteers working for cryptocurrencies, because in the medium term and longer term, developers aren't going to continue to work for something for nothing. So what I'm saying Ripple, the company, is very valuable. And there's a reason why Ripple, the company, is very valuable. They have no debt. They have $25 billion in the bank, no debt. They have amazing clients who are using XCurrent and they're using XRapid already. This is not prototype stuff. There are clients that are using both systems. Right. If Ripple was listed on the stock exchange, their price would reflect the value of XCurrent, and their price would reflect the value of XRapid and XVIA. Now you say to me, oh, but you know, XCurrent doesn't use XRP. Yes, you're correct. But the thing is, XRP, this is where I think there's a real, dichotomy. I think people just don't understand. XRP, yes, can stand alone in the sense that it trades on the secondary market on the exchange, right? It's a standalone. Yes, it does. And yes, Brad Garlinghouse said the company, if the company fell over tomorrow, XRP would just trade like another security. And that's fair enough. But the thing is, you can't have it both ways, and I'll tell you why. If Ripple, the company, and the technology, say, got hacked, or there was a malicious attack on the technology that completely stuffed up everything, all the algorithms, everything, then that would be reflected in XRP's price, wouldn't it? Just like the stock market. If Ripple went broke, or if Ripple, basically had, all sorts of things going on against them, which is bad, the stock market price would go down and the bond price would go down. And the crypto market should be no different. Ripple should go up, and with bad news, with good news, XRP should go up, and with bad news, XRP should go down. XRP was issued by Ripple way, way, way back. Okay, so basically, yes, XRP can stand alone in the sense that it's on the secondary market, for sure, but the thing is, it should also be reflecting the value of Ripple. Ripple is valued at $25 billion. And what I mean by that is, Ripple has $25 billion and no debt. They can go out there, and this is exactly what they're doing. They're funding new startups, okay? New startups, right? Where they're funding them and they're putting in seeded capital, which means, someone's got a great idea on the IT side. They put in seeded capital and they go, right, I'll lend you $25 million so that provided you use our system of Ripple technology and you use XRP. And that's what they've done with Coil, okay? Someone said to me, is it a big deal that CTO's gone? It's not, because the deal is Ripple basically have an investment in Coil, okay? They've got an investment in Coil where Coil have to use Ripple's technology and they have to use Ripple's XRP. So the thing is, Ripple, the company, is extremely valuable because people buy their technology, and their technology is worth a fortune. And XRP should reflect the fact that their technology is worth a fortune. Also, Ripple updates and maintains that technology. They sell that technology to clients, existing clients, and new clients. And with IT contracts, this is something else you've got to understand, with technology IT contracts, particularly with the banks and even with corporate treasuries, IT is a long game. And what I mean by that is banks and corporate treasuries, and I've worked in all of them, and fund managers, don't change their IT overnight. They don't even change their IT every 5 years or 10 years. That's why banks have stayed with SWIFT for so long. It is a major, major overhaul. And it costs an enormous amount of money for banks to change from one system to another, because they've got all this risk stuff that they've got to monitor constantly. They have to report to ASIC, which is Security Investment Commission here, just like your SEC. They have all sorts of things going on. So IT is a huge spend, and it costs a lot of money. This is why Ripple, the company, is so valuable. And if we look at crypto as being a security, and it's as a funding tool, no different to any other funding tool, i.e. debt, i.e. equities, the crypto XRP is a funding tool, which it is. It should reflect the value of Ripple, the company, even though it's a standalone on the exchange. If Ripple went broke, it would reflect the fact that Ripple went broke. You can't have it both ways, and it's no different to the stock market. If a company does incredibly well and their forward projections, their P&L is better than what the market thinks, the stock's going to go up. If their P&L if their loss is worse than the market's, thinks, the stock's going to go down. The crypto market should be no different to that, and that's what I'm saying. Because you don't have a regulation. You don't have regulation. Sorry, my phone's going. You don't have regulation. You have a lot of retail idiots in this market who basically just fud everything, and they think I'm fudding, and they think, Ripple's a scam. They just honestly have no idea. They're just a bunch of idiots. And honestly, I never talk about stuff I don't know about. If I know about something, I'll talk about it. But, I don't know anything about cars or mechanics. I'm not going to make out that I know something about cars and I'm a mechanic when I don't know anything. I only talk about stuff that I really know. And that's what frustrates me with people that are fudders on Ripple. They have no idea about the technology and how good the technology is. And it works, and they have clients already. There seems to be this view out there that Ripple has no clients. Ripple has over 100 banks using Xcurrent. They also, sorry, my phone keeps going, it's really annoying. They also have probably, from last count, I think about 10 to 15 clients already using XRapid. Now, the thing is, Ripple, the company, make their money in a couple of ways. They make their money from the technology by selling that technology to banks. That's number one. And they are long leases. A bank will go into a technology agreement or an IT agreement with a company. Number one, they've got to make sure that the company's still around, because a bank won't go into an IT contract unless they are absolutely 100% that that company is going to be around. Because as I've said before, the IT, moving to new IT is a mega thing in a bank. It's huge. And they have to make sure that the IT company is still going to be around. Because, as you know, technology changes, and it changes fast. And Ripple's technology is cutting edge, but it's got to stay cutting edge. So developers keep working on the technology, keep advancing. You see things in GitHub every day. They bring out more and more products at the technology edge, so that they are, the best of breed technology. Now, as I said, an IT contract could be for 20 years or more, and that would be extremely valuable to the company called Ripple. Literally. Now, again, let's go back to XRP. Okay, say Ripple got on the stock market, all right? So they've got a stock called Ripple, the equity stock. They've got bonds, okay, and they've got crypto. So they have 3 securities. They're all securities. The stock, I believe Ripple is another Google, okay, because it has incredible IT. And it is another Google. It's the biggest I believe Ripple is the biggest thing since the internet, okay? And the internet came out in 1992. And it took people, I remember it when it came out. I was in Treasury. People didn't know anything about the internet, and it took a while, okay? It took about 5 or 6 years for people to start getting used to it. Because now we have the internet, things are going to happen fast. But I'll give you an example of what the arbitrageurs do in different markets. The professional market, they'll run a hedge fund where they'll have a lot of different money, but they can invest in crypto, they can invest in equities, and they can invest in debt. They can invest in anything they want. Okay, so say for example, and I'll give you an example of this. Say for example the stock of Ripple for one share, sorry about this, Say the stock of Ripple's for one share is $1,000 because it reflects that Ripple's a very profitable company, and rightly so. Okay? Say the bond of Ripple, when Ripple got issued, bonds get issued at par at $100, right? But because Ripple is doing so well, the bond has a price now, a capital gain of $150, which brings, say, the bond yield down to 1%. With Ripple stock being at 1,000, it brings the yield on the stock to 2% or 1.5%. Okay, so what happens with a hedge fund? They'll look at all the securities that Ripple issues, and they'll go, and I'll give you an example. Say the bonds let's be a bit more dramatic about this. Say the bond yield with the capital gain and the accrued interest is, say, 5%, and the yield on the equity is 1%. A hedge fund manager will sell Ripple equity and they'll buy the bond, okay, because they've got the same exposure to the same company. But if they go into the bond, they're actually getting, 5% rather than 1% being in the equity. Okay, you understand what I'm saying? So if they hold equity and they don't hold the bond, they're better off selling the equity and buying the bond, because they're selling the equity at 1% yield, which is crap, and they can go into the bond, which is still Ripple exposure, and basically get a yield of 5%. So what a hedge fund manager will also do is look at the price of the other securities. If they're allowed to invest in crypto once regulation comes along. What they would look at is they would go, wow, Ripple's an incredibly valuable company. Why does the crypto only trade at 68 cents? Now think about it. When the bond trades at 150 and it's performed out of sight, it's gone from a yield of, say, 9% down to 5% because it's gone from 100 to 150 in total price. The equity has performed amazingly and the yield's gone from 4% down to 1%, but the crypto is just too cheap compared to the other securities of Ripple. And that's what the professional market will look at. And that's pretty much what they'll look at. I hope that makes sense to you. So, the thing is, Ripple, the company, for every X current they sell, they write long-term IT contracts that generate them amazing amount of revenue. It's annuity income, and what I mean by annuity income, it's probably monthly income that just keeps, clocking up more and more money for Ripple all the time. Now, also what I want to say is Ripple, the company, can buy back its own shares, it can buy back its own bonds, and it can buy back its own crypto. Okay? So, if a company has a lot of money, like Ripple do, like a lot of money, they can buy back their bonds that they issued, buy them back out of the market and take them off circulation, okay, and cancel them. The same with shares. They can buy their own shares back, take them off the market and cancel them. So just because Ripple has 100 billion in cryptocurrency, it means jack shit. Ripple could buy, 50 million of that cryptocurrency and pay market rate for it because it's cheap and cancel it. So instead of the issue being 100 billion and circulating at 39 billion, all of a sudden you're dealing with, a total issue of 50 billion rather than 100 billion. You get my point? So all of a sudden, the supply issue that everyone keeps talking about is not there anymore. And what happens with a lack of supply? Price goes up no matter what. Ripple could do that. And if they're smart, they probably should, because it'll teach a lot of fudders out there a lesson, because companies can do that. When they issue their own securities, they can do that very, very simply. Right, Christ, 30 minutes already. So just, going back to this, if the technology of Ripple didn't work and it was subject to malicious attacks and all this negativity, the wallets don't work and everything else, the crypto XRP would be smashed. Now, the fudders in this stupid retail market, or the traders, can't have it both ways, where the crypto gets hit if there's negative news, but it doesn't go up when there's positive news. So the thing is, when regulation comes in, and proper regulation, that's number one, for the institutional guys, and when there's custody accounts, custodian accounts, because that's the biggest issue, is stopping the institutional guys coming in, the professionals, not the retail amateur in this market. When the professionals come in, they're waiting for custody, okay, so that cryptocurrency can be safely held without being subject to hacks. Now, Nomura came out today, one of the biggest banks in Japan. They are working on custody. Coinbase is working on custody. I think Nasdaq's even mentioned it. Custody of the crypto, the digital crypto. So there's no malicious attacks. Now, crypto custody can be held in cold storage, but it's not good enough. Coinbase have basically said once they have the custodian site set up, they literally have more than 20 billion or more money literally ready to go. Once the custody issue is fixed, it'll open the floodgates, and once the regulation comes in, it'll open the floodgates for the wholesale fund manager, the professional market that knows how to value these securities and know where there is value and where there isn't value. Also, you've got a whole heap of securities on the crypto market that are trading at ridiculous levels, i.e. NEO, wherever it is, $58 or something, or i.e. IOTA, or i.e. Even Ethereum, where the technology doesn't work. There are issues with the technology. NEO has 6 nodes, 6 or 9, which is a joke. NEO is centralized technology. They have to push stuff through for NEO, right? The admin of the technology. IOTA, the same thing. 30 to 40% of IOTA's transactions have to be pushed through by the administrator because they don't get enough transactions, so that, when you do your own transaction, you've got to verify another 2. IOTA's technology is centralized. You know, Bitcoin, you know, the miners, 4 miners out of China controlled Bitcoin in terms of the validation of those transactions. If that isn't centralized, I don't know what is, right? You know, and again, it depends on what part of, you know, the crypto you're talking about to what's centralized. Ripple, the technology, is not centralized. You know, yes, the company is, but the technology is not. You know, I can name many other cryptocurrencies out there listed on the market that have a valuation price of which is just a joke, and the technology doesn't work and it's centralized. Now, I've named Neo, IOTA, I could, you know, Sentiment Network, I could list quite a lot, okay? Even Bitcoin. But you'll go, oh yeah, but Bitcoin only has 4 million, you know, 4 million on issue left. Yes, that's true. But, you know, there is an argument to say that Bitcoin is not centralized. And then you've got other idiots out there saying that XRP is not a cryptocurrency because they think it's centralized. It's not centralized. The technology is decentralized. There tends to be just some absolute garbology out there. Anyway, look, I just want to what's that? I'll just take a break for a sec. Also what I'll say is a lot of the technology, a lot of the cryptos that are trading well above where they should be trading, they don't even have a prototype working or an alpha or a beta type model working, and this, you know, they're going up just on hearsay, and there's no fundamental basis for the valuation of those cryptocurrencies. They don't have clients, and the technology doesn't even have a prototype. So where do you get the value of some of these cryptocurrencies when the technology doesn't even have a prototype or doesn't even have a GitHub, for example? You know, just crazy. I could list credits for one. No GitHub. They say, oh, you know, we've got incredible technology, but we're not going to do a GitHub, you know, which means, you know, you can't even see the technology, and it should be open source and everyone should be able to see it. But credit still trades, you know, it's traded somewhere near Ripple, and they don't have any clients and they have no technology. It just doesn't make sense, and it's stupid, and it's a reflection of a market that is very immature, a retail market where most people don't have any idea. That's pretty much it, and that's the story. So, oh gee, this is crikey, I'm trying to get through these questions. I got sick of writing stuff. So, okay, someone said you got confused about XRP. You got confused about valuing XRP according to the Ripple Labs. I hope I've made that clear. Ripple Labs basically is the company that issued XRP. No different to a share. No different to Ripple Labs issuing their own stock. If they're profitable, Ripple Labs, the stock will go up in price. If they're not profitable, the stock will go down. The cryptocurrency should be no different, okay? Ripple Labs, if they're transacting 10% of banks and have a cash flow of $12 trillion, that gives Ripple said valuation XRP, that gives Ripple said valuation. XRP are not shares in Ripple. I understand that. XRP is no different, as I said before, to security, and it's a funding tool, and it should reflect the price of the technology that's in existence, that works, that has clients. It's not prototype, it's not beta. They have real clients that are paying for the technology and using it. And regardless of whether they use XRP or not, the fact is X current will lead into X rapid. That's what happens. People buy things on forward projections, and the cryptocurrency should be no different. Just like shares, people buy on the forward projections, the equity, because they believe going forward it's going to be more valuable. So what do we got there? Simply transfer units on the X rapid system. X current doesn't use XRP. That is correct. X rapid is being used by about 15 clients already, and they use XRP. Every ICO that Ripple now invests in, because they have a lot of money, will use XRP. Ripple has a flat platform just like Ethereum, just like Neo, just like any other platform, Waves, whatever, where a company can issue an ICO on their platform and use their XRP. And that is what Ripple is going to do going forward with their new thing they've just brought out, which they mentioned it in the conference that's just gone by. They will have ICOs on their platform because they have a platform that you can use, just like Ethereum, as I've said, that will use XRP. And Coil is one of those companies. And they're going to start basically selling that as well. So the use of XRP going forward will be getting higher and higher and higher. So what have we got here? How does Ripple's high value equate to X of being worth? Because Ripple is the technology, XRP should be a reflection of the company that initially issued the crypto. No different to shares, no different to bonds. That's pretty much it. Only if XRP was used specifically, it doesn't matter. I mean, this is where, I don't know what YouTubes people have been listening to, but seriously, just because XRP is not being utilized at the moment, but it doesn't mean it shouldn't reflect the value of the underlying company of Ripple. That's what I'm saying. Every other security in the market reflects the underlying value of the company that issues it. Now, whether they did an ICO or not, now I don't think they did, but it was still a reflection of a funding tool that Ripple issued. No different to shares, no different to debt. If Ripple is smart, the company, what they should do is buy back XRP, cancel it and burn it. Seriously. And do an IPO and see where the value is there. Because, that's what they should do. As a matter of fact, strategically, that's what they should do. Because the cryptocurrency XRP is incredibly cheap and doesn't reflect the true value of the company. And as I said, if the technology doesn't work, then the value of the crypto should go down. What we've seen in this retail market is the value of other cryptos goes up and up and up on garbology when they don't have real clients. They might, do an extra bit of something within their tech, but it's not a function of real clients that pay real income. Ripple has a real business, and so many cryptocurrencies in the market that trade at incredible levels don't. As I said before, people look at the market value of Ripple. It doesn't mean anything because the market value can be changed very quickly by changing the issuance, by changing the total circulating XRP and the total supply. The issuer, being Ripple, can quite easily buy back XRP and burn it and cancel it. Pretty much that is it. Very, very simple. What else we got? I'm trying to bloody make this quicker. It's 45 minutes already. Okay, what else we got? Someone else said, one thing to remember, it will take Ripple some time to get XCurrent installed on 10% of banks worldwide. Really, they need to get a high transaction volume, blah, blah. Well, can we go forward? Discounting. Right. As I said in the first video, banks and companies cannot afford not to use Ripple's technology. Even if they use XCurrent, they are saving themselves 30% on the bottom line. I went through that profit and loss thing. They are saving themselves 30% compared to their competitors. If they save themselves 30% on their bottom line, that means they've got 30% extra revenue to do something else with, where they can strategically go out there and get other competitors, their other competitors' clients. Banks and corporates and the like cannot afford not to use Ripple's technology. That is a fact. Because if they don't, the people that use the technology have a competitive advantage where they can get other banks and other corporates' clients. It's just that simple. Now, the 10% worldwide, I think Ripple are professionals and they can get there very quickly. It'll be driven by competition. Everyone these days is trying to get more clients. It's the name of the game. Clients generate revenue. Without clients, you're dead in the water. Every one of these cryptocurrencies that are beta or whatever, if they don't have clients, they are dead in the water going forward. They will not reflect where their valuation should be. EOS, for example. Yes, it has a platform. We think it's going to work in June. You know, it's supposed to be in direct competition with Ethereum. You know, the stocks, you know, the cryptocurrencies at $12, but it got up to 18. But it doesn't even have a working prototype. It's still on Ethereum's technology. Why should EOS be priced at $18 for one cryptocurrency or 12 when it has no clients and it generates no revenue? Think about it. It's garbology. It shouldn't be there. Because if it has no clients, it doesn't earn any revenue. If it earns no revenue, it doesn't have the developers working on the technology to make sure it's best of breed. EOS should not be where it is. The fact that it's sitting at $12 and it uses Ethereum's technology is a joke because it doesn't generate any revenue itself. So how can something be at $12 or $18 when it generates no revenue? It's just stupid. You know, nothing should be worth value if it generates no revenue. Revenue is the bottom line for any business. You know, you need revenue to pay the developers. You can't live on thin air, right? Okay, so what else we got? Instead of trying to into pricing. Okay, fine. All right, let's go to the next one. I really appreciate, but I believe you should point out the tech part of Ripple Solution is a bit mixed and not clear. Well, I don't know what's not clear about it. XCurrent, yes, it's for payments. It's instant settlement, instant. Okay, 1 to 2 seconds, 3 seconds, compared to Swift, 2 to 10 business days. That's business days, not days in the week, but business days. So 2 to 2 weeks, right? What the point is, banks using instant technology settlements don't need to hold huge amounts in their Nostro or Vostro accounts. They don't need to pre-fund their Nostro and Vostro accounts. That's the point. If they use Swift, they have to fund their Nostro Vostro accounts because they don't know when the cash flows are going to hit. If they use XCurrent, it's instant, so they know the cash flows hit straight away. They don't need to pre-fund their Nostro and Vostro account. Banks using XCurrent save 30%. Ripple charges the bank, say, 10% for the use of the technology. It makes Ripple very well off. Ripple can then spend that money on investing in other startups and make them use XRP. Even if Ripple didn't sell XRapid and they just continued to sell XCurrent, look at it for what it is. All they have to do is continue to buy other startups and get them to use XRP. I don't know why people can't understand this. It doesn't make sense to me. I'm getting frustrated because it's so simple and I don't get why people don't understand. You know, even if no one used XRapid, which they do, all Ripple has to do is keep selling XCurrent and then using the proceeds of 25 billion or more to invest in startups with 25 million and get them to use XRP. What's so hard about that? I don't get this. You know, I don't understand why people don't understand. Anyway, XRapid is XCurrent plus the use of XRP. So XCurrent eliminates having to put lots of money in the Nostro and Vostro account because you don't know when things are going to settle. With instant settlement through Ripple's technology, you know when things are going to settle, so you don't have to have this lazy money sitting in these accounts earning nothing or very, very low interest rates. The money could be used for lending or anything where the banks are earning higher interest rates. That's why they save 30% on their costs. Right, what else? If the banks use XRapid, they basically save 60% in total. 60% goes back to their revenue line. So their competitors cannot, if I'm a bank and I use XCurrent or XRapid, I've already got a competitive advantage. You know what that means? I'm in a better position than someone else, you know, another bank. I can go out there and get their clients. Client base is everything. That's how I make revenue. That's how I make profit and loss. XRapid has already been used. It's not a pilot, you know, it's being used, you know, as we speak. It's working already. You know, CBA use XRapid internally with their internal businesses, which are offshore and everything. XRapid is being used, and I just don't think people get this. It's being used already. Any insights to stagnant price? Well, look, as I said before, this is an amateur market we're in. The cryptocurrency market is still amateur. You know, there's retail people in this market that have no idea about anything. They don't understand financial markets. They don't know how to value stuff. The big professionals that know their stuff can't come in yet because the regulation's not in place, number one. Number two, they can only invest in securities. And number three, the custody issue. Once all that stuff's sorted out, plus proper prospectus, not like these idiot white papers, and compare the prospectuses to the debt market and the equity market, once all that's in place, the big professionals can come in and it'll be a changing game. Okay, so this guy said something about Coil. It's not an issue. Ripple invest in Coil, okay, and they want them to use their XRP. Now, this Spring thing, XSpring, whatever it's called, basically, Ripple has a platform like Ethereum or Neo, whatever. It's actually better. And they're now actively going out there to get ICOs on to use their platform and to use their cryptocurrency. I want to try and make this quicker. This is not a speculative asset. I don't know why you think that, whoever wrote this. Ripple has actual working products and generates revenue. With no revenue, you're dead in the water. With no revenue, the crypto would be valueless, zero, right? Absolutely. It's not a speculative asset in that sense. Yes, the price goes up and down and whatever, but they have working products and real clients that pay. That's why the company, Ripple, is so valuable and has $25 billion in the tin with no debt. Okay, what else we got here? Christ, key. Time is flying, man. All right, what else we got? Okay, I didn't even, I'm trying to answer all these questions. I think there's some just 12 trillion will move through the system a year. I mean, I don't quite understand this question. 12 trillion move through the system a year, but banks only hold 2 to 4 seconds. I mean, Ripple, XRP, every time it turns over, there's a cost, there's a burn rate, that's number one, and also there's a cost to turning XRP over. The cost is 0.0004, okay, which Ripple, the business, gets, okay. The business of Ripple makes money with the technology, number one, and they make money with the usability of their currency, of their crypto. So when it gets used, they make money as well. Also, they make money, thirdly, when there's a burn, okay, because it's effectively taking out supply in the system, and so they make money 3 different ways. Look, when someone uses Xcurrent, okay, there's no Ripple involved. When someone uses XRapid, there is. Ripple, when they do those transactions on behalf of the client, will basically take on any price fluctuation. In a secondary market, and I think this is where people just don't get it, in a secondary market, you can have a bid-offer spread, a buy and a sell, just like the equity market, where you have so many buyers and so many sellers, and the bid-offer spread can get wider depending on what price someone's prepared to buy XRP and depending on the price if someone is prepared to sell XRP. If all of a sudden, and forget about XRapid for a minute, if all of a sudden you start having some huge buyers come in for XRP, right, and there's not much on the sell side, those buyers will take out the sellers. Okay, they might take out the sellers. There's a buy of $5 million, and they'll see on the sell side there's a seller for 100,000 XRP. They will take out that seller at 100,000. Depending on how much they want the position, they will take out more sellers at a different price level. That's how markets work. So a person that has a $5 million transaction they want to execute on the exchange, the secondary market, will take out all the sellers, which forces the price up. In terms of XRapid, you wouldn't get a lot of price movement because it's 1 or 2 seconds, correct? But in the secondary market, you can get huge price movements. That's, it's a completely different animal. It's no different to people selling XRP. The selling pressure is more than the buying pressure, so it forces the price down. Does that make sense? I hope it does, because seriously, that's how markets operate. Right. Again, the intrinsic value of XRP doesn't need XRapid to make it valuable. And like I've said before, and I'll say it again, XRP is valuable even if Ripple only have Xcurrent. If they only ever sold Xcurrent, XRP is valuable. And I'll say it again, man, because the underlying value of Ripple's business is valuable because they sell the technology, which is worth a fortune, which puts 25 billion in their bank account, 30 billion, 40 billion, 60 billion, right? 100 billion. And what they do with that money is they go and buy other companies and make them use XRapid and XRP, or they make them use their platform, right? But even so, it's the same if Ripple listed on the stock exchange. It's like saying the intrinsic value of the equity shouldn't reflect the underlying business of Ripple, or the debt shouldn't reflect the underlying business of Ripple. It's nuts to say that XRP should not reflect the underlying value of Ripple just because XRP is not being used. You know, I don't know where people got this stuff from. It's just wrong. You know, I don't know whether you've been educated by other, YouTubers, but what they're telling you, I don't watch other YouTubers, they're just telling you the wrong thing. Seriously, they got no goddamn idea, honestly. Right. 50% of how X can be tied. Again, we've got the same bloody question. It's just stupid. Stupid. Xcurrent. I'm Ripple the business. I sell Xcurrent. I get millions and millions and millions of dollars in because I have real clients with real money that pay for my technology, which is ongoing and ongoing and ongoing. Yes, it doesn't use XRP, but the underlying business that issued the XRP as a funding tool, right, is profitable. Ripple can buy back XRP at any time. Anytime. They could reduce the supply today from 100 billion to 39 billion to 10 billion in total supply, and what do you think would do? What do you think would happen to the XRP price with a reduction in supply? Right? When they're in a $24 trillion market where they need a lot of XRP for liquidity. And that's not the market they're in. They're looking at the remittance market in India, in Mexico. The remittance market between Mexico and the US is $35 billion. The remittance market in India is 12 billion, or is it trillion? I don't know, but the numbers are mind-blowing. Maybe it's 35 trillion. The remittance market. The Indian remittance market is one of the biggest markets in the world. And Ripple is there in Mumbai. Indians work everywhere, all over the world, and they send all their money home to mum and dad. The remittance market is huge, and they need instant settlement, right? So, of course, Ripple, the company, and Xcurrent is tied to XRP. XRP, even though it trades on the exchange, will go up or down according to the company, what happens to the company. Because without the company, the technology is dead in the water. And Ripple doesn't make money from the company to buy other investments that will use XRP. And it's a process. You know, we're looking at a valuation for 1 or 2 years. We're talking about technology here. A lot changes in 2 years or even a year or, 6 months. People are incredibly short-sighted. You know, we're looking forward to the prospects and the actual clients they've got. You know, they may even find that, 100 billion XRP, given the markets they're in, and they're circulating 39 billion of circulation is not enough when they get in the wholesale market, when the wholesale market starts investing in crypto. You know, I don't know what else I need to say here. Okay, can I clarify how I got the 12 trillion? Yeah, 10% of it. Right. Okay. 12, this is the net present value we're talking about, okay? And what I did is, to answer people's questions, I used a simple valuation model. Valuation models have assumptions in them, always. No matter what valuation people come up with, there's always room for error, and they have assumptions within the model. Just for simplicity purpose, right? Simplicity, I used 100 billion on issue, worst case scenario, rather than 39 billion. Technically, yes, I should have used 39 billion, but worst case scenario, 100 bill, to be conservative. Okay? Now, we're not looking at just 10% of a $24 trillion problem. We're looking at the net present value of those cash flows in 12 months' time brought back to today's value. That's the first thing I'll say. Now, with Ripple, they're trying to fix a $24 trillion problem. That's just one market. The assumption is that they will only convert 10% of clients, right, in that $24 trillion market. And that's a low assumption because I think they'll actually convert more. On top of that, there's another 10% added for their IT that clients pay for. The clients don't get the IT for nothing. On top of that, there's, 5% for the maintenance and the implementation of the IT and the ongoing. So what you're looking at is a $24 trillion market, assuming 10% clients take up their product, X current, plus they're earning 10% revenue on their IT, which I think is low, ballpark, given the banks, if they just use X current, or the treasuries or the corporates, if they just use X current, they're saving themselves 30 to 40%. Ripple could be earning more than that in terms of the technology. I've made a conservative assumption that they're, only getting paid 10% IT, but often IT can be a lot higher than that. That's why Ripple has 25 billion in the bank. So the cash flows in a net present value model, the cash flows every day, every week, valued over the 12 months to what they're going to be generating if they only get 10% of the market over the 12 months with the 10 to 15% of IT revenue and extras that go with that. And it's done on 100 billion as a conservative, as a worst case scenario, and then brought back to net present value. The net present value then gets divided by the 100 billion on issuance. I took the higher figure because it was being conservative. Okay, I hope that's clear. We're actually looking we're looking at 10% of the 24 trillion, that's correct, but you're forgetting with that 2.4, there's also cash flow that gets added to that, revenue, and that's what we're talking about here, revenue. that Ripple generates. And that's what you got to value, the revenue being generated. You know, the revenue's being generated by the IT systems. They don't get them for nothing. Plus their long-term contracts, they don't get them for nothing. Plus the implementation and the systems, and also Ripple do the transactions for Xcurrent, where they do the transactions on behalf of the banks or the corporations, and they take the risk, the price risk of XRP. The price risk of XRP if they're using XRapid. Does that make sense? Right, okay. Okay, banks don't get it. That's correct. Oh, that's my stuff. Okay, I thought it was another question. Oh man, I got to tie. This has got to stop. This is. Oh crikey, do we have more questions here? Okay. Xcurrent. Yeah, well, I think I've gone through that. Oh man, this is really long. Trying to address your questions here. I think this is. We're getting close to the end. I'm really sorry. I don't understand this. Who's this? Some guy? When will exorbitant... Oh, this guy's just being a real smart ass. LMA, whatever your name is, I can't stand smart asses, seriously. You know, I don't put up with smart asses. I don't have the time or the patience for it. So, you know, just go and look at some other YouTube idiot, okay, that doesn't know anything, right? You know, we're looking at price, you know, we're looking at valuation going forward, back to net present value. You wouldn't even know what that's about, seriously. This guy, Andrew Lennon, XRP is a crypto. It's a cryptocurrency. Okay? It's decentralized. It's a crypto. Anyone that tells you it's not doesn't know what they're talking about. Okay, what are we saying? How can you say this value, you presume Xcurrent wallet is... Again, I think I've answered that question, seriously, Carla, and if you can't see that by now, I just give up. Okay, guys, I'm going to call this today. I hope that helps. Please be kind to everyone. I'm exhausted, and seriously, I do this for nothing, and sometimes I'm just like, honestly, if you guys can do a better job, by all means, please, because seriously, some people are just, honestly, they're just really thick. Okay, guys, look after yourselves, and I'll talk to you soon. Thank you.